our next talk is going to be a fireside that includes tales from the trenches about venture capital to token generation. And our speakers are going to be GALIA BENARTZI and GIGI LEVY-WEISS.
So I hope there's no fireside here.
No fire. No fire. Thanks, everyone. Thanks, Mira. Thanks, Hartej, for bringing us back in from lunch, and to Decentralization for a great lunch. It's really, it's an honor to be here all day long, and it's an honor to sit with GIGI Levy, one of my first and thankfully not only but best friends in the space. The team behind Bancor previously came from the world of mobile gaming, and in fact our first company, Mytopia, built here in Israel as well, was acquired by 888 when GIGI Levy was CEO of 888. So that's when we met, and we were early and hungry entrepreneurs, and it's been a true pleasure to build a friendship and a mentorship over the years. And so I'm glad that I can take my seat next to GIGI to really share with you guys some interesting insights, because he's gone all the way forward and all the way back.
What's forward and what's back?
Well, let's find out. So you need no introduction, and I actually am excited to spend this time less on accomplishments, of which you have so many, and more on insights, and really giving you guys some food for thought about what's happening in the space, because it's truly changing every day and at warp speed. So why don't we start with a little bit of, we'll start soft with kind of an overview of insights on how we've moved from venture capital in its older iteration, when really very few and specific folks were privy to venture capital, to its kind of modern incarnation as it's moved through angel investment, micro funds, crowdfunding, and then today where we find ourselves in token generation.
That's like 2 hours, right?
It's a brief overview.
Brief overview. So I think that when we talk about token sales, clearly I think that right now people are mixing a bunch of things that are happening together. There's cryptocurrencies, and there's the tech stack that blockchain represents, and there's the new business models that blockchain companies bring to the market. But the one point that people sort of sometimes disregard is actually the change in funding. And the change in funding is, in a way, a continuation of what started with product crowdfunding, with Kickstarter and Indiegogo, which were the first people to come out and tell us, you can buy a product before it's even made, before we even know how it's going to be made. And that's going to be the beginning of our journey rather than the end of it, because usually we buy the product at the end of the journey. And then that was followed by AngelList, and actually in Israel we've had quite a few of them, Our Crowd and a platform called iAngel that I invested in, and a bunch of others that came and said, well, if we're already doing this, why don't we limit it to the product? We can actually start selling part of the equity up front. And that led to, right now today, there's around $1 billion a year that is founded into startups using the equity crowdfunding, which became at the time, seemed to be the biggest revolution in venture. And then the latest and greatest of this are token sales. And again, put inside the question of which one of them are done as securities, which one of them are down as utilities. But that basically takes the full circle on democratization, and basically means that it's going to be the easiest thing in the world to participate in the success of a company. Now, there are token sales and there's token sales, right? There are securitized token sales that represent a share of a company's revenues, are essentially, or a share of a company's profits, are essentially digital equities. And that's the way we need to look at them, and that's the way they're going to end up being traded. And that's great, because there's really no reason why, I don't know if you guys know this, but if we stop the trading right now in NASDAQ at any moment, there's probably like around 5% of the shares that nobody knows where they are, because they're in transit between brokers and inter-dealer brokers and lenders and hedge funds. So you really don't know where they are. So that's kind of ridiculous. Why don't we make them digital? When we make them digital, we take the power away from the central organizations. We also reduce the transactional costs, which is good for everyone. And we basically democratize them. So that's security tokens. When it comes to tokens that aim to be utility, clearly it's more complicated, because you're not promising the buyer of the token a share of the company's profits. You're promising, or you're not promising, hopefully, but you're allegedly the buyer is thinking about an appreciation of the token price as a model of making profit. which deserves a whole new different conversation because that generates a totally different business model. Part of it is phenomenal, which is the first time there's alignment between the people building the company and the buyers and the sellers. It's usually marketplaces. The blockchain is a marketplace replacement. So you create the first time alignment between everybody rather than having to take as much rake as possible from the market. But on the other hand, it's a pretty scary tool as an investment tool that we all need to be very careful with.
Yeah, so you bring up some good points. First of all, it sounds like you're pretty excited about the potential for security tokens in terms of the amount of securities that are out there that are possible to be digitized in this way.
I think it's just, this is the future. It doesn't matter. I don't know yet whether eventually we're going to see this succeeding as a new platform, like some of the platforms sitting here or others in the Silicon Valley and other places, or whether eventually it's going to be NASDAQ offering these, right? It could be both. But it's clear that securities are not going to be traded. Just like looking today at people jumping up and down with pieces of paper and saying, hey, I want to sell my share, I want to sell that looks ridiculous today, right? It's all computerized. Then looking at the way some of these equities are traded today it will look as ridiculous in the future when we can basically represent each one of these securities in the digital form, in a digital token that has specific identity that can never be lost, can never be not counted for. It's just natural that that's the way it's going to go. I'm not sure who's going to win on that one, but that is, for me, clearly the future.
Yeah, so in the early days of the internet, we used to talk about how the first phase of internet development was really digitizing businesses that we knew from the pre-internet world, right? So yellowpages.com, encyclopediabritannica.com. And then in the second generation of the internet, we saw kind of new models that we weren't even able to imagine before. So that's Wikipedia and Yelp and more interactive models.
Well, these are actually not great examples, or they're great examples for something else, because Wikipedia is Britannica 2.0. It's not a new product. So the thought is that many of the products that we're consuming were first thought of hundreds of years ago, right? Because the basic human needs have not changed that much over the years. And so every time a new platform emerges, the first thing that happens is that these existing services, there's first the big building blocks. These big building blocks are those that are best served on this new platform. And then after these big things are being taken, so, we found real estate in the past over, with newspapers. But before that, we found them in general registry that you had to go to the municipality. And so then municipality, then newspapers, then websites, then online marketplaces, right? Then mobile marketplaces. And then the next thing is going to be another evolution that's going to take the same human need of finding the cave where you want to sleep only on a new platform. Similarly, that's what's happening in each one of these platforms. And then after you take the big needs, there's more needs that come up that you couldn't serve before. And so you're basically creating new needs.
So my question is exactly this one, which is if Wikipedia is 2.0, and we look at Facebook and some of the network effect companies that you're so involved with as being 3.0, right? The kind of the group forming networks and allowing folks on your platform to create their own Facebook groups, to create their own subscription channels on YouTube. When you look at blockchain, securities are kind of, in a sense, are 1.0, taking securities that we know and digitizing them to the blockchain. There's many benefits there. What do you see as the 2.0 and the 3.0? What are some of the innovative areas in blockchain that you're most?
Yeah, so it's a great question because at the end of the day, I think the one thing that worries me more than anything else after investing in quite a few blockchain projects is that when I look at successful blockchain projects, the ones that I would say, here is something that did not succeed because people believe in blockchain. It succeeded because it works better on this new platform, right? And other than very little use cases, we see very little of these. And the use cases that are working are mostly general ledger use cases, meaning very similar to a security use case. And even these, it mostly works when the transaction value or the data unit value is very high and the frequency is very low, like real estate registrar, right? The first places where we're seeing blockchain as a database technology being implemented is in real estate registrars, because that's exactly that. If somebody misplaces the fact that I own my home, that has a huge price. But on the other hand, the frequency is very low. Like even in the largest countries, we have like 10,000 transactions a day. So that's perfect for that. And the question then becomes, what are the next frontiers where we think that the blockchain technology, by its nature, is going to be better for creating services? And here, and I can talk for hours on this, I kind of break it down into two things. I break it down into areas where the technology is actually serving the use case better. And there's very, very little such places. It's mostly places where you need this to be unstoppable, places where you need this to be uninterruptible, where the level of security and the level of basically service continuation is going to be so high that that is the essence of the service, right? And so if you want to create an unstoppable messenger, yeah, using blockchain as your ability to have your routing server, that's a great way of using it. It's unstoppable. It makes it great. So that's one area. The other area, which is even more interesting, which is where the real revolution is the areas where the blockchain enables us to replace what we call the marketplace stack in technology. So I'll give you the easiest example. Think about an Uber, right? So Uber basically is connecting drivers with passengers. It's a marketplace. It's what's called an asymptotic marketplace. We're not going to get into this now, but it's basically connecting drivers with passengers. For that, because Uber's model is to make money and to bring equity value to the owners of the equity, what they're doing is that they're trying to suck as much value out of it by raking as much as they can. So they're going to basically try to take as much money as they can, and the rule is that they'll take as much money as they can just up till the point that the marketplace breaks. Right? They make sure that it doesn't break, but they take as much as they can. Once we're inventing a new technology that allows to connecting the customers with the drivers without a central organization, we're basically unleashing a whole new way of thinking about this service, where suddenly everybody's aligned around one thing, which is reducing friction. Because if I, as the creator of the service, the driver and the passenger all want this to be as flawless as possible, I must have that, because my only way of winning is not by taking more money out of the ecosystem, is by getting more and more people to use that, because that's what's going to get my token to be, more material in the ecosystem, and therefore more valuable. Suddenly, for the first time ever, there's a full alignment between both sides of the marketplace and the person or company or group that is arranging that service. So that is the theory, and that is where the beauty of the blockchain business models, the decentralized business model comes to play. The only problem is that we haven't yet seen enough companies that are leveraging this without forgetting that the reason why people end up getting Uber and accepting Uber is because they also want customer service, and they also want to be able to complain, and they also want to be able to get whatever, to get a refund if the service was bad. And so the thought that all we need to do is put it on the blockchain and then miraculously that's going to beat centralized services, that's wrong. We need to take what's good in this new business model, what's good in what the new technology enables us, without forgetting that at the end of the day, if we don't have consumers using it and enjoying it, it's never going to work. And so we need to think customer service. We need to think quality of service. We need to think how we build a valuable service that's going to beat the centralized service, not just on the philosophical great model, but also on the level of service that you're getting.
So you mentioned that one of the primary drivers of traditional companies like Uber is really to create the shareholder for the value for their shareholders that are holding the equity. Of course, the venture capitalists often are the ones holding that equity. In this new paradigm that you
part of it,
at least a lot of it, usually, some of it, depending.
Scars from the past.
Depending who you're working with, win-win situation. But in this kind of more aligned business model that you're describing, you're saying the users of the network are essentially the holders of the equity, they're the holders of the tokens in these new networks, and potentially you can have a more value-aligned marketplace. So my question to you, and what I've heard many times, is kind of where do venture capitalists fit in this new paradigm? What kind of value can and should they bring to the table? What will no longer work?
So I think that the reality is that when we'll look at it a few years from now, we'll see that nothing changes. I'll explain what I mean. I think that in every new ecosystem that emerges, there are people with different risk appetites. And at the end of the day, the earlier you come into a venture, when you need to bet on, so in a normal venture, you need to bet on the team, the seed say the team, the domain, and the idea, right? And, everybody has their own taste. I say 70% team, 20% domain, and 10% team. When you build a blockchain project, you also need to bet on the fact that it's going to work better on a blockchain, because building it on AWS is always going to be easier and always going to be faster. At least for the coming few years, it's going to be easier and faster, which means that you're betting on now 4 things rather than 3. The meaning is that betting on early blockchain projects is a very risky thing. And just like there are different people with different levels of different risk appetites, the same thing would apply for supporting these new ventures early on. And if you forget the beginning, and the beginning was the Wild Wild West, and now we're in the just Wild West maybe. But what's going to happen over time is that people that have put money early on into some of these token sales are going to understand that putting money first before there's no product, there's really no team, that's a really dangerous thing. And you really shouldn't put your savings in there unless you can afford to lose them. And so as people understand that, we're going to start seeing again the emergence of people that have enough money or managing other people's money, which is easier, and have the ability to take these risks early on. And so we may call them crypto funds, we may call them crypto VC, we may call them whatever we want. But eventually, a few years from now, we're going to see different people looking at this asset class. There's going to be a bunch of people that will want to invest early on because they want to make high returns, but they understand that their money could be lost completely because maybe the team's going to break after a month. Who knows? And then we're going to see a bunch of people that want to invest only when it's later stage. And then we're going to see a bunch of people that only want to buy when the product's already working and the risk is very low. And so there's going to be a room for all of these. And I think that some VCs are missing it and therefore are going to be obsolete. They're dinosaurs that are going to disappear. And I think that most VCs, that when I just did a survey among some of my friends in the Valley, and all new VCs that are being raised right now, all of them have put in their LPAs and their limited partner agreements that they can actually invest in tokens, which means that they're all understanding that this is happening. And so I think we're very likely to see that that normal VC is going to play a similar role over time, even if it's different people.
Do you see...
Our time is up.
Okay, so then we'll just wrap it up on our last question. My last question, which is what specifically in blockchain are you excited about, specific companies that you're...
Yep. So let me start by saying one thing. If there's one thing that I want to leave with everybody here, I mean, there's people here that know the market as well as I do, but if there's one thing, I think the market's changing now, and if you can't explain to yourself why you're going to build a kick-ass company with a kick-ass product that's going to serve many people, that has a good product market fit with or without blockchain, and that the blockchain does not undermine it, if you can't answer all these questions, then don't go and raise money. Work a little bit more, work harder, just like you needed to do with normal venture capitals before, or angels, and get to the point that you only take money when you know what you're going to build, when you know it's going to be valuable, or at least you believe it's going to be valuable, and not because you believe that your tokens are going to be great. This is a very short-lived business model, and the window of opportunity for that, I never thought it's an opportunity, but the window of opportunity for that is closing. As to opportunities right now, and I'll wrap up with that, we're looking now at 3 different areas. One area is infrastructure protocols, and the reason why we're looking at them is because this is still very early on, and there's a bunch of them here, there's a bunch of them abroad, there's lots of theory around that, and a lot of things that are going to happen. And the big nice thing about it is that when you invest in an infrastructure protocol, if you get it right, the returns are phenomenal. So, we've done a bunch of these in the past. I participated in Bancor as a financial infrastructure protocol. Invested many years ago in an Ethereum hard fork called Scenario that then pivoted to do something else. Invested in DAOSec here in Israel. Invested in Space Mesh, and we're looking at that as kind of early bets on good people with big ideas that may or may not work. That's one thing. The second thing that we're doing is that we are big believers that as a financial asset, this will require the financial ecosystem that evolved around every financial asset. And so many of these sort of centralized, boring companies that make a lot of money are things that we're interested in. So we invested in Coinbase. Why? Because we could and because it's a great business. We're looking at investing in another, there's at least one more crypto exchange. We've looked in the past into a crypto ETF. I've invested personally in a crypto kind of algo trading hedge fund. Why? Because this will happen and this will work. And that's the second thing. And the third thing, in decentralized applications, the only thing we're doing now is that we're investing only if there's an underlying asset that already has a team, a market, and a product. So the only thing we're betting on is that it's going to be better on the blockchain. In this, you know one of the projects that I'm involved in, we've taken the largest peer-to-peer VPN in the world called Hola, which is a company that I invested in the past. It's around 20 million monthly active users, a few million daily. It's already decentralized. It's already peer-to-peer. People are already using it. And we're now putting it on the blockchain, and we're building a layer of services on top of it while tokenizing it, that at least we know that there's real product market fit for the product. We know that the team knows how to build phenomenal products because there's millions of people using it. We know that they build a brand that people love. It's like 800,000 reviews on Android store with 4.7 ranking. So we know it's a good product. And we know that there's some limitation of the product that by putting it on a blockchain infrastructure and tokenizing it, we can actually make it better. Now, does it mean that we can build a gazillion-dollar company on it? No, I'm not sure. But what I know for sure is that the only risk we're taking is on the blockchain part and not on something else. So these are the three investment theses. Thank you so much.
Yeah, you heard it from GIGI. Work harder.